our law, and next 20-25 minutes we will be able to answer all the queries and the questions which were asked by the participants to us. So still, if anybody have any specific questions, you can all ask and provide your fields of the experts, the panelists, which will be presenting you the webinar, which will be shared by the end of this presentation. Now, Rishit Seth, Chartered Accountant and working as an auditor and tax consultant, is very delighted to host this webinar. And on this auspicious occasion, I would like to introduce you to Nadeem and Umendra, Chartered Accountants. Now, I shall proceed further to present you the presentation for the webinar as follows. I'm sharing my screen with everyone. Yeah, as you can see, yes, Nadeem and Umendra, Chartered Accountant, we started working from with humble beginnings from the year 2006 in United Arab Emirates, providing excellency in the professional services and consultancy to our clients. And we have been emerging and has emerged as one of the most sought after service provider and field meeting various needs and demands of our clients. Now, besides that, I would like to provide you the information that we have a team of more than 100 professional experts who's been handling all the services related to finance, taxation, and audit. And I would try to further you out regarding the same information. We have qualified chartered accountants, MBAs, IT support specialists in our team of experts. Now, we are also the registered auditors for all the UAE banks and the respective free zones in the UAE itself. Yes. Now, Nadeem and Umendra, Chartered Accountants, we have been able to establish our company in three of the emerging economies in the world, which is starting from UAE. We have five branches in UAE. One is in the mainland, and other in the different free zones, as well as in Sharjah. And we have also established recently 2 3 years back 2 years back in Bahrain. We have a full-fledged team there working and sorting out all the queries of the customers. And we have also established our office in India as well. Now, regarding the spectrum of services that we offer everyone, I would like to provide you the information regarding the audit and assurance and bookkeeping. We provide various kinds of services which relates to accounting and bookkeeping, financial auditing, internal auditing, and we have also specialized experts which also provide services for RADA audit and budget review as per the Dubai Land Department approved auditors. We have also been able to provide expertise in the tax consultancy department, where we provide ESR and CBCR, which is the newly established law, as you already know, on which basis we are hosting this webinar. And we also provide VAT consultancy, excise tax law, review and support, and other ongoing VAT services and return filing and query handling. We also have a specialized team for IT department, which also provides our clients with expertise in software implementation. Tally Gold certified partner. We have a very good strategic partnership with Tally department. We also provide workflow automation. We provide annual support contract, customized modules, and business vertical specific solutions as well. Now, if you see at the glance, we have three offices, three countries direct offices. We have over 8 countries and more than 5,000 customers, which provide us happy feedback. And like as I can already told you that we are also the Tally certified partner in the region. Now I would like to present this presentation to further it out with our expert, Mr. Haseeb Hamdani, who will provide us the brief overview about the economic substance regulation. I would like to introduce to Mr. Haseeb, who will join this meeting. He is a graduate from Oxford Brookes University. He is also an ACCA member. He's a UAE Chartered Accountant and also members of the UAE's Association of Accountants and Auditors. He has more than 5 years of accumulated experience in the field, and he also provides consultancy services to the businesses in various industries. Now, I would request Mr. Haseeb to proceed the presentation further. Mr. Haseeb, kindly start the presentation to our participants.
Hello, good afternoon, everyone. Hope you're all doing very well in these challenging times, and I'm very delighted to have your presence in this webinar. So, our topic of discussion today, as Mr. Ishit has already told you, it's a very hot topic in UAE nowadays. It's economic substance regulation. Basically, this is a newly enacted law implemented in UAE in April 2019. Now the hype is more because the return time, the notification time is like just approaching. So, anyways, before going further, I would like to share the screen with you, and so we can have at least the background of this law. So, why this law has been implemented in UAE? So, this law was implemented in UAE April 2019. In order for UAE to be the member of OECD. Basically, OECD is an organization of economic and cooperation development, comprising of over 135 countries. They had assessment of UAE's tax in April 2019. For that, they had put UAE, as Ministry of Finance website states, that UAE was put on a blacklist by a European Union. So obviously, UAE has to maintain its reputation in the market, in the country, and to show its competency as a developed country. So this law was implemented by UAE. This law was implemented for basically the European Union, and OECD has some concerns over base erosion profit sharing. To combat these practices, this law was enacted. Before going further, we would understand what is base erosion profit sharing. We will try to understand this base erosion profit sharing with an example. Basically, this refers to techniques which are used by different businesses to exploit the gaps in the different tax jurisdictions. For instance, we will take an example here to elaborate it further. Let's think that there's one scenario in which country A, we'll take country A as an example. It's purchasing some material from its supplier in, let's say, China in one part of the world, and then another part of the world, let's say America or England, any other high tax jurisdictions. So this country A is purchasing this material for, let's say, 1,000 dirhams, and then selling it to its customers for, let's say, 2,000 dirhams. Now country A is making a profit of 1,000 dirhams. This was all okay, but because in country A, maybe country A we can take as an example. With country A we can take in our mind that country A could be some high jurisdiction country, let's say England or any other country where taxes are high. In order to avoid paying higher taxes, now what a business will do in the second scenario. Now country A, now we will have two countries, like country A and country B. So now what will be happening is, in the second scenario, now this would be called as base erosion profit sharing. Country A would be purchasing the same material from its supplier for 1,000 dirhams, but now country A would be selling this material to country B, because our business is in country A. In country B, maybe we have a second company or any other business. Keeping a very small margin of, let's say, 100 dirhams, we are selling it to country B, and now country B is selling it to the end customers. So with this example, we can see that how the profits have been shifted. Before, country A was making a profit of 1,000 dirhams, but in second example, country A is making only 100 dirhams of profit, and a huge portion of the profit have been shifted to country B. Country B could be a country where no or nominal tax is present. It could be one of the countries, like there are many countries where we have very low tax rates, low or no, for instance, UAE itself, Bahrain, and then we have British Virgin Islands. So the profits have been shifted to country B in order to avoid paying taxes. Now the payments and receipts and invoicing will be done in country B, where the tax is minimum. And now we can see with this example, it has cost country A 900 dirhams. The figures could be higher when the stakes are higher, obviously. So because of this one, these practices, there are many countries which are getting hurt, and European Union and Organization of Economic and Cooperation Development, OECD, they had some serious concerns over, because the countries, their economies were being hurt, and they had to take some measures. And as you can see in the slide, that these practices cost around USD dollars 100 to 240 billion dollars in loss annually because of these practices. Now, OECD has different countries as its members, and UAE was not its members, and they did some assessment, some tax assessments for UAE and some other countries, and they found major non-compliance, or we can say that these practices were more common in these countries. So they had put UAE on, obviously, the blacklist, and UAE had to prove its position in order to maintain its relationships with the European Union and OECD. For that, obviously, this law was implemented in UAE along with 11 other countries. So it's not just implemented in UAE. There are 11 other countries. The one that we are most familiar with, Bahrain, then there is British Virgin Islands, and there are many other, like other 11 countries as well. So in order to be the member of OECD, they had some 15 steps action plan. These action plans they had developed in order to combat BEPS practices, base erosion, profit sharing practices. Out of these 15 steps action plan, 4 are minimum to be complied by its member countries. And in its first phase, UAE has introduced only 2. There are actually 4 that are required to be complied in order to be the member. But in first phase, UAE has implemented only 2. That is counter harmful tax practices and country by country reporting. Now, this one, counter harmful tax practices, is actually the one which we will be discussing today, economic substance regulations. It is also referred to as economic substance regulations. Then there are 14 other action plans as well, which may or may not be implemented in UAE. So anyways, I hope the background of economic substance regulations, what it is and why it is implemented in UAE, it is clear now. So obviously we have already discussed that it will improve UAE's competency as in its foreign relationships with other countries, especially with European Union. We all know that European Union is like UAE and European Union are having some great business alliances. And obviously UAE has to maintain that reputation. With this law in place, UAE will be much better position to maintain. So how it will affect the businesses and the countries? This will allow UAE and other businesses not to shift their profits from high tax regimes to low tax regimes. For instance, we have many countries where taxes are high: India, Pakistan, England. There are higher tax rates. So what people do actually, they transfer their profits in UAE in order to get benefits of low taxes. I'm not saying to that these practices should not be in place. Obviously, UAE has some benefits for its businesses. There's an atmosphere. It's very brilliantly designed for all the businesses to conduct business here. But economic substance regulations asks for some measures to be taken, some measures to be in place. Businesses would still be able to conduct their business practices, but it will affect most of all those businesses which don't have any other purpose, but they are just shifting their profits from high tax regimes to lower tax regimes, like UAE itself in the context. So these businesses would have to either change their practices, or they will have to face some serious consequences. Whom and to which businesses this law applies? Well, it applies to all the licenses in UAE, whether they are individuals or they are some juridical persons. Even if somebody holds a certificate of incorporation, that a natural person would also be required to comply by the rules and regulation of this law. Yes, except for the government entities. If any company is owned directly or indirectly by government, which I don't think so would be the case for our participants here. I think most of our participants would not be owned directly or indirectly by the government. So for us, for majority of the businesses, for let's say 90% or like 99% of the businesses, they would fall under the scope of ESR, and they need to comply by its requirements. As the name itself suggests, economic substance regulations. The name itself suggests that the economic substance, the business substance, the activity through which you are generating your income should substantially be present in UAE. That is the basic concept for this law. What do we mean by adequate substance? The adequate substance means that the businesses, if there are businesses who have companies in different countries, they have a company in UAE, then they have company in England, India, or any other jurisdiction of the world, they have to prove that in order to be complied with by these regulations, they have to prove that they have adequate substance in UAE. They have to prove that the business they are conducting in UAE is not just for the sake of profit shifting. It's not that they are escaping profits from some other countries and shifting them into UAE. We know that most of the businesses are doing that. But this law is now here to combat such practices. Such businesses who are engaged in such activities, either they will have to stop such activities, or alternatively, with some experts' advice, obviously, they can modify their structure to prove that the adequate substance. And now, adequate substance means that the businesses should be directed and managed within the UAE. It should not be the case that there are some shell companies here, payments and receipts are being done, invoicing is being done, but nobody is here. They don't have any offices. We will have such examples. You must have also observed in your surroundings such example as well, that people buy some flexi desk and they don't have just for the sake of a company. They should have some adequate number of qualified employees. They would also need to incur appropriate expenditure in UAE. Now, what do we mean by appropriate expenditure? It refers to, for instance, there's a company who have, let's say, 100 billions of sale, or like 100 millions, a big figure. Anyways, they need to satisfy that to carry. Obviously, if someone is conducting a business at a such large scale, they would also be. It's logical that some business, it's like office would be. It would have a bigger, huge premises. They will have some multiple people from multiple backgrounds, some like qualified people. They will have fixed assets would be present. These all counts towards adequacy of substantial presence in UAE. And there's one more important point here, maybe or may not, you all would have come across these terminologies that conducts core income generating activity. This economic substance regulation specifically says that in order to satisfy the economic substance regulation test, the core income generating activities must be conducted in UAE. Now, what are core income generating activities? Core income generating activities are the activities through which business is majorly driving its profits, its income. This is the activity through which, for instance, as a consultancy business, for us, the core income generating activity would be providing consultancy to the businesses. For shipping business, the core income generating activity would be providing shipping services to its clients. For consultancy and for people who are dealing in goods businesses, they will have their related core income generating activities. So in order to satisfy the substance, the adequacy of substance, the core income generating activities must be conducted in the UAE. Now, we will further elaborate these core income generating activities in context with different businesses. But let me tell you in advance, the list is non-exhaustive. It means that this is not the final list. Government has stated some of the examples of what activities could be, some businesses could be doing, but these are not the final. This is not the final list. So maybe you could be doing some core income generating activities, which you will not see in the session or on the guidelines of the government, but those activities could still be counted as a core income generating activities. My stress was too much on these core income generating activities because we have been receiving so many questions on core income generating activities. So anyways, we have this ESR decision tree. It's just a flow chart that which companies are required to comply by economic substance regulations. We can see at the very start that if somebody has license, the first question, do you have license in UAE? Do you have the license? By license, I mean the license could be even a license could be held by some natural person as well. I'm receiving some messages. Okay. The license could be held by the natural person as well. So it doesn't really mean that if you hold a license and you are a natural person, no, if you hold a license, if you hold a permit, then you need to comply. If you do not hold a permit, then obviously maybe you are on some employment visa here and you don't have any business here, then it does not apply to you, obviously. But if you have some license, it will apply to you. And the next question comes, the relevant activity. The relevant activities, some activities the law defines in the law that these are the activities which we will obviously study further, but just for briefly for you to understand, not to stuck here. The relevant activities are described by the regulation. The relevant activities on some of the relevant activities include business, the banking businesses, lease finance, shipping business, distribution and service center, and so on. We have a list which we will be discussing further. If your activities are being conducted in, if you fall under these activities, if your business is related to these factors, then you really need to be concerned, and you need to comply by the rules and regulations of this law. Then we have a long list of this tree. Maybe you can take a screenshot for your reference here. So we will not go deeply into this because it's just a flow chart. There are questionnaires going on. If the answer would be yes, then you will do that. But overall, the basic concept is, if you have license or permit in UAE, you need to assess your position with regards to the points that we are discussing today. And some of the points, obviously, I have already discussed as well, then further points. With regards to that, you need to assess your position. Then you need to assess whether or not you fall under the requirement of this economic substance regulations. You will be needing that. You will need to take the measures accordingly. So, moving further to the relevant activities that we have briefly explained. I have explained before. These are some of the relevant activities which are mentioned in the law. The risk for best practices is huge in these activities. In banking, insurance, shipping, headquarters, distribution, holding company, property management, intellectual property, investment fund management. In such sectors, there is a more risk of businesses exploiting the tax gaps. We will further elaborate how businesses are doing that in a matter of some minutes. The key considerations for relevant activity should be that this applies to all the relevant activities. If you are in the relevant activities, that a substance over form approach must be taken. My colleagues who belong to accounting backgrounds, they would be familiar with these terms, economic substance over form approach. But for people who are not used to accounting jargons, I would explain it in layman terminology. Substance over form means something which is visibly is not visible is something else, but we should not rely on our eyes. We should not rely on what is visible to us. Actual substance should be taken into consideration. For example, something is wrapped. A chocolate is wrapped in some other wrap, but we should be concerned that what's actually contained in what's the actual substance. In business terminologies, it would be as we should need to consider that what is the actual business that you are doing, not just focused on the activities mentioned on your license. We have many businesses. We have come across examples where activities, there are some different activities mentioned on the license, but businesses are conducting, in addition to those activities, they're conducting some other activities as well. So, for instance, if your activity is general trading, then you might think that, okay, the general trading is not mentioned in the law, so I'm like, I don't need to apply. No, substance over form approach must be. So it could even be the case that your activity states, it's a very rare chance, but this could be the case, that your activity could be stating that you deal in general trading, then you could be involved in some consultancy stuff, some services businesses as well, or vice versa as well. Your license activity would imply that you are dealing only in spare parts trading, but in actual, you are providing spare parts consultancy. So although obviously the license does not allow that, the way some businesses are still doing it. The point of elaborating this thing is that substance over form approach must be taken, and consideration should be taken to see what is the actual business that a company is conducting, and should not be deduced on the basis of the commercial activities based on the mentioned on the license. And this could also be the case that business could be conducting more than one relevant activity. Maybe they are involved in shipping business, then they're also involved in distribution and service center. This could be the case. And in such scenarios, if a business is conducting more than two relevant activities, their ancillary or instances for this approach. But after taking into consideration all the relevant activities, you can club them together and accumulatively report them to the relevant authorities. There are obviously relevant authorities for that, to which we will be discussing home to report in further. Before going that, now we will briefly understand a few of the relevant activities, because I know that not all people would be relevant to shipping business or other. So we are keeping it very concise. For specific businesses, we might need to go into further details, but for the sake of this, we need to briefly see this. There is investment fund management business, in which we will be managing investments for different businesses. We are taking the decisions on the behalf of our investees who are investing into them. Obviously, as you can see on the slide, that we are taking decisions on currency interest fluctuations, and there are a lot more into this one as well. But today, there will be some activities which we will briefly see, but will not go into detail, and not to bore you, obviously, because they might not be relevant to all the participants. So we need to consider, we will focus on the activities which are more relevant to majority of the people. This is lease finance activity. This is relevant to most of the businesses, directly or indirectly, knowingly or unknowingly. It involves when you lend some money to the relevant. It could be the case that parent company is giving loan to subsidiary companies to establish its business, and then if the company is charging interest rates on that loan, it would fall under the lease finance activities. And then there are these activities: funding terms, monitoring, managing risk, identifying and acquiring assets to be leased. These are core income generating activities that we discussed before. These are the core income generating activities that would be involved in lease finance businesses. But as explained earlier, this is a non-exhaustive list, which means that you could be doing some other verification as well. You would be involved in lease finance businesses, but you might be doing some other activities other than those mentioned here. But these are some major and most common, like you are agreeing the terms of how long this lease should last, the duration, the interest rates. If you are providing some assets for lease purpose, it might be the case that you are going on searching for, let's say somebody needs a car. This could be the case, like there are some private institutions funding on assets. If I am a lease finance business, somebody comes to me and asks, I need a car and you need to finance, then maybe I'm in the market looking for the suitable car for that person. So yes, these are the core income generating activities, and these activities must all be conducted in the UAE. Then there is a headquarter business, which might be irrelevant to most of our participants. So we'll just briefly go through it. That if the headquarters is established in UAE, and the other companies, like maybe this could be a case of a multinational company mostly, but not to major businesses who have only one company established in business in UAE. So they could be taking some management decisions. They could be providing assistance to their foreign companies. So yes, you can take screenshots for your reference, because I will be focusing more on the activities which would cover over most of the participants. So not to bombard you with too much information. So we'll just focusing on the information that would be relevant. Yes, if some one of our participants is involved in like headquarter businesses or other activities which we are not going into details, they could always approach us, obviously. Then there are intellectual properties. Intellectual property could be copyrights, some intangible assets. For instance, this would mostly apply to some software-based companies. Maybe you have developed some software, for instance, Tally or SAP or any other software, some inventory management software. Now you have taken the copyrights, and now that you are generating royalties, you are charging some service fee for that intangible asset that you have. Then this intellectual property, it is also one of the high risk business as well, but I'm not sure that most of our participants, I don't think so they will be involved in this. So we will just briefly go through this. The decision making is involved there. The distribution, for instance, taking into context the example of the Tally or any other software. Because we are the Tally partner, so this example is most relevant for us. We are anyway the leading Tally partner in UAE. Anyways, so these marketing services we could be doing for instance, for us, we being the gold Tally partner, we market Tally services within the UAE. So, but obviously we do not retain the rights to the Tally, so it does not apply to us. Maybe the owners of the Tally, the founders of the software, the company, maybe or may not, obviously depends upon further assessment, maybe they would falling into this category. So anyways, moving further, the holding company business, I have received a lot of questions of this holding company business. People confuse it with parent companies. They confuse it with branch companies. To make it, we have briefly explained it here that a holding company, the sole purpose is that they have shares in UAE. For instance, there's a holding company who had some shares in Emaar, any other like UAE stock exchanges, or maybe some private companies. Their sole purpose is to that they have some stakes in the equity of the companies, and their sole source of income is the shares, the dividends from those shares, the capital gains on the appreciation of those shares or the equities. If the stakes goes higher, they'll get capital gains. So if there's a company who might be holding shares and getting dividends on those shares, but they don't have any other activity, then they may not fall under this category. So as you can see that it does not carry any other commercial activity. So they are solely and wholly focused on the acquisition of shares. This one, distribution and service center. This applies to many of our participants. This would apply to those. So basically, distribution and service center, as the name suggests, it is consisted of two businesses. One is service business and other is a goods, trading of goods. So briefly going into this, distribution center would typically businesses purchasing from foreign connected person. They have some parent company in, let's say, another country, and they are purchasing material from that company and then distributing it to its customers, they would fall under this category. And the companies which are providing services to to a foreign connected person in some other jurisdiction, some other country, for instance, a UAE company providing consultancy service to its subsidiary or any other company in England, they would fall under this category. At a basic level, obviously, the company might need to assess it further. And then we have some core income generating activities. This business, I think, would apply to majority of our participants, because most of the companies, they are purchasing from their related parties and then distributing it. First of all, obviously, if you are involved in such practice, we are sure you would also be sure that you fall under this economic substance regulations. What further would be there is that you need to assess your business. You need to assess your business structure, how many transactions that you are conducting with these foreign connected persons, whether they are a one-off transaction, what is the route of the trade, and then if you are managing inventories, you are a distribution business, but whether or not you are managing inventories, you might be taking orders, but this all should be within UAE. These are the core income generating activities, and obviously non-exhaustive list, as explained earlier. There could be some other activities pertaining to this distribution or service center business. Administration and consultation, the earlier example that I've told you, if you are providing consultancy service to some other related companies in other jurisdictions, then you would fall under these categories. And obviously, if you are importing some products from a related party, and then the products are coming into UAE, that would also, in that scenario, we would also be fallen under this category. So these are, you may take screenshots, and we will also share this PDF version with you as well at the end of this session. You can take screenshots for this managing inventories and transportation, storage. These are all some basic activities that any business involved in distribution services will be doing. Then there are insurance, and I don't think so many people would be here from insurance, but just as a briefly letting you know that the insurance companies means that managing the risks of someone else. If it means, this could be life insurance, this could be non-life insurance. For example, if I'm an insurance company and providing insurance services to different insurers, I would be involved. I would be fallen under this economic substance regulations, and I need to comply by the rules and regulations. Then there's a shipping business. Mostly business here, logistics and freight forwarder, they would be concerned with specific mention of this shipping business in the economic substance regulations. So let me tell you briefly that if you operate ships to transport cargo or passengers, you are falling under this category of economic substance regulation. By operation, what do we mean by operating of these ships? We mean that managing, hiring, paying crew members, downsizing, or like hiring some more, taking decisions, maybe we need more employees, all the decisions related to human resource, all the decisions related to maintaining of the ships, and overseeing and tracking ships, where is our ship right now, and all the tracking that you are doing. It means that you are operating in this business. And this was a brief overview of all the activities. I tried myself best to give at least a brief and not to bore you guys as well, but to stick to the topic and make it. So anyways, if you are falling under this economic substance regulation, what you need to do? First of all, some authorities, the relevant authorities. The relevant authorities are the authorities who had given you the license. For instance, for Dubai mainland, it could be Dubai economy. From Jabal Ali free zone, it would be JAFTA. Other free zones, the relevant authority would be the one to whom you would be reporting. So there is not a centralized system of reporting like Federal Tax Authority. You don't have to report to the centralized authority. For each licensee, it would be reporting to the relevant authority. So some licensees, some relevant authorities state that whether or not you are conducting economic substance regulation activity, you still need to file a notification. So even if you don't fall under any of the category of economic, you still need to file for some of the authorities. Not all. There are some authorities who state that if you are not conducting, but yes, it depends. It varies from authority to authority. And what is the procedure for that? Obviously, you would be approached by the authority and they would require you to demonstrate your economic substance in the notification. There is a format. Some authorities have portal. We have a slide on that as well in upcoming pages. So you need to first you need to assess yourself how you are falling under the economic substance regulations and how it applies to you. And then accordingly, you may need to report it further to the relevant authorities. The deadlines have already been communicated by majority of the relevant authorities, but not all of them. So yes, as we have discussed that only if you are owned directly or indirectly by the government authorities, you are required to file ESR notification. Then there is a return as well. At the end of the year, there is a return. The first step is to file a notification, which is compulsory by some authorities, obviously, which is compulsory, which has been made mandatory for some authorities to file this notification. Then the businesses who would be falling under the relevant activities, they actually need to file an annual return for economic substance regulations. What would that return be including? That was the whole topic of discussion for today. So that would include financial aspects as well as non-financial aspects. Mostly in returns, we have only financial aspects. How much income did we drive? How much expenses we did? But in this ESR reporting, we need to tell how many, what businesses we are doing, how number of employees, and many other long list of questionnaires we would be needing to demonstrate to satisfy the economic substance test. And yes, one more point that I would like to clear here, most of the businesses, they have asked me whether they are required to pay some charges. Is it a new tax? Would government would require us to pay something to the government? No. You don't have to pay anything to the government. You don't have to. The only thing that you might need to pay is the penalty, which hopefully no one of us will be paying. Other than these penalties, obviously the penalties are there. We'll discuss the penalties. There are huge penalties on this. Obviously, this is something serious. So other than these penalties, you don't have to pay any tax to the government, any charges, anything. You don't have to pay anything to the government. You just have to demonstrate your economic substance. And the return, previously we talked about notification. This is reporting. First, we will file the notification, then we will submit this return within 12 months after the relevant financial year end. Now, what is the year end? We will briefly letting you know that the law was implemented after January 2019. So if your year end was January 2019, start of the year, then your year end would be December 2019. If your year start was June 2019, now the year end would be June 2019 to June 2020. You don't need to satisfy the requirement before June 2019. So obviously this is pretty much very basic thing. So this was it for the session of today, and hopefully all the requirements have been and we have explained everything in the most easiest words. And now I would like Mr. Rishit to take over, and he has some questions that were asked by our participants at the time of registration. So we will have some frequently asked questions that were posed to us by our registrants. Due to the large number of participants, I'm afraid we won't be able to answer individually in this session. But yes, of course, if you have some questions, you can always approach me, and we have our numbers given at the in this screen. So I'm just sharing this screen. So anybody would have concerns, they can take note of numbers.
Yes.
My name is Haseeb Hamdani and Zakir Rahman, and obviously now Mr. Rishit, he would be taking it over from here. Okay, Rishit, I am stopping. Okay, let my screen share would let it remain open. You can just the questions that you had. So
yes.
let's
So
start with the question.
yeah, thank you, Mr. Haseeb, for your expert views on the topic, which is still ambiguous to majority of the participants, but we really appreciate your efforts towards it. And hopefully, the federal government will also provide more clarifications regarding this newly established law as well. So now, after this law was enacted, we were able to receive some questions from the participant who were mostly concerned with how this newly enacted law will be taken forward from now on. So I have a few questions in hand. Now, before referring to the questions, we have two of our more expert panelists on the webinar. I would like to introduce you to Mr. Umendra Chaturvedi first. He is the founder and the managing partner of Nadeem and Umendra Chartered Accountants, and he's also a CMA from India and a CPA from Australia. He's a qualified CPA, and besides that, he's also been a registered member of the Bar Council of India, and he has been having more than 15 years of enriching experience to provide services in this field. And other than that, I would also introduce you Mr. Zaki Ur Rahman, who's also in our panelist. He's also a finance graduate with the CMA qualification, and he's also having an experience of more than 10 years in the field of finance, accounts, and taxation. Now that I have introduced both of the expert panelists, I would like to ask few questions to Mr. Umendra sir. One of the questions that we have been facing from the client is first question is that for the succeeding financial year after filing economic substance notification, what should be the important thing that companies should look out for and expect to do in regards to this regulation? And secondly, will the government impose any additional tax or annual charges to the business entity with relevant activities?
Thank you, Rishit. Are you listening?
Yes.
Yeah. Actually, there are no additional tax or annual charges for businesses with the
Right.
relevant activities. They just have to ensure the compliance and make sure that there is enough economic substance to be carry out those relevant activities in UAE. If they fail to file the notification or returns on the time or fail to establish substance in the UAE, the penalty will be levied, but no additional tax or charges.
Right, right. That's great to know that. So we don't have to pay any additional charges regarding the law if, but the penalties might be levied if the law is not properly complied with. Right. Another question I would ask Mr. Zaki, is management consultancy is management consulting activity considered as engaged in a distribution and service center business?
Well, hello everyone. Yes, it depends upon the type of the transaction. The answer can be yes, and it can also be no, but it depends solely on the type of the transaction. We will need to go into too much detail just to assess that. But
Right.
simply saying, yes, it can be,
It
because
can.
the reason is that the service center business, it includes provision of services, and when you are providing services to to a foreign connected person, that basically becomes that activity, that transaction becomes within the ambit of the economic substance regulations, and hence it is applicable. But we still need to go into much more further details just to assess whether it is finally applicable or not. It
Right.
depends upon the transaction. It can vary because these economic substance regulations, on the top, they may seem that they apply to each and every sort of transaction, but we need to consider the substance over form, as Mr. Haseeb pointed out, the concept of substance over form. We need to look at that as well, and then decide what would be the final scenario.
Correct, sir. Okay, and now I will ask another question from one of our participants to Mr. Umendra. For example, Russell Khema economic zone based flexi desk companies are also obliged to register for ESR? And does it apply to flexi desk companies registered in free zones or not? Yeah, I think. Can you unmute?
Okay,
Yes.
sorry.
Yes.
Yeah, yes, definitely. All companies registered in any free zones, like whether having flexi desk, business center, or physical office, have to assess themselves to understand if they are carrying any of relevant business activities, or and file the notification accordingly to relevant authorities.
Correct. So it mostly will be applicable as per
Yeah,
your thoughts.
yes, everyone.
Right. Right. So one of the more interesting question we have here to Mr. Haseeb, who gave us the presentation regarding the ESR. Mr. Haseeb, can you provide us with the information that what is meant by exactly the core income generating activities, which is also referred to as CIGA?
That's a very interesting question, Rishit. This is the question by a majority of the participants and the companies. And as I have already explained the meaning of core income generating activities, I will reiterate my stance on that. The core income generating activities are the activities through which a business is actually generating its core income. A business could be conducting more than two activities. There are some ancillary activities, some secondary activities, but the major source of revenue, the profits, the income for the business would be those core income generating activities. And with an example, for instance, there is a business who is, let's say, dealing in construction business. Their core income generating activity would be development charges. Their activity would be constructing the actual building. So yes, the core income generating activity may vary, would actually vary business to business, but the basic concept is the core income generating activity refers to the activity that is actually deriving the profits to the company.
Which forms the majority revenue of the company, right?
Yes, exactly.
Right. All right. Thank you. Another question we have, I would ask Mr. Zaki, what is the ESR notification deadline for Javza companies? Because if you know that a lot of companies are registered under Jabal Ali Free Zone since the beginning of age. So can you throw some light on it?
Sorry.
Yeah.
Well, yeah, Rishit, the thing is that under the economic substance regulations, the Ministry of Finance has authorized each and every licensing authority to provide their due dates for the reporting of the ESR regulations. So each company every license holder has to provide their assessment their assessment whether ESR regulations apply to them, and if they apply to them, they have to submit a notification, a formal notification, and an ESR return for the period, economic period in question, which is 2019. So as of yet, JABSA, among other licensing authorities like the DED and Sharjah Economic Department, they haven't given out any final due date for the submission of the notification and the returns. But uh, but in considering the recent notification from the Ministry of Finance, it is 30th June, and for most of the licensing authorities, it is expected that 30th June will be the final due date, and some have already set 30th June as their due date. So we can expect that even there is no announcement, we can still expect that 30th June will be the final due date. So there is, I think we have almost 1 month left to us make the assessment and give out the notification and also give out the ESR return. So I would suggest all JABSA companies and other license holders from other licensing authorities to get their preliminary assessment done, so that they are prepared on time to file the notification and the return.
Right. So it's still a tentative date and awaited, but then again, we should make sure that we are prepared with the law in hand. Right?
Exactly.
Right. So I have another question. I would ask Mr. Umendra, like if we don't have any relevant activities in a company, do we still need to comply with ESR or not?
Sorry, come again.
Like if we don't have any relevant activities in our company, do we still need to comply with the ESR, or we don't have to comply with it?
So it depends on the guidelines issue by your license issuing authority like DMCC, DIFCC, Ras Al Khaimah Economic Zone, and few other have made it mandatory for all licensee to submit the notification.
Right. So it mostly depends on the relevant authority who's trying to. Okay. Right.
Yeah, and Jackie already told the 30th June normally the last date of notifications.
Right. So we have another question, Mr. Zaki. I would like to ask you that if entity has a proper regular activity and only one small interest-bearing loan given, which is less than 1% of the turnover, does it still qualify under lease finance activity? Because there are a lot of companies who just provide interest-bearing loans, which is less than 1% of the turnover, which is like very less. So will they qualify under lease finance or not? Is there any regulation regarding that? I think your voice. Yes.
Yeah. Now it's okay. Yeah. So considering the economic substance regulations, we have to also assess it considering the CIGA, the core income generating activities, which Mr. Haseeb already discussed in detail. So coming to that portion, first we need to look whether it constitutes a CIGA or not. And the basic element in core income generating activities is that we need to comply with the substance over form, the idea of the substance over form, which means that whether it doesn't matter if a licensee is allowed to carry out an activity or not. If a licensee is carrying out an activity which is not included in the license, even then they are required to report on the activity. So my idea on that is that yes, it will apply even if you have one transaction that is under a relevant act, that falls under a relevant activity and becomes a core income generating activity, and rest of the transactions are irrelevant or do not fall under any relevant activity. Even in that case, the economic substance regulations apply, and you will need to file a notification by 30th of June. You will need to file a return. So it doesn't matter even if you have one transaction You may have thousands other transactions which are not relevant. But you have one transaction that is relevant. Even in that case, it applies to you.
Right, sir. Thank you. Okay,
Yeah.
then I'll ask again, Mr. Haseeb, one of the question we received, like, is a free zone manufacturing entity being a wholly owned subsidiary of a Singapore entity, for example, covered by ESR and required to file notification followed by the reporting?
Well, that depends on further assessment. The actual business of that subsidiary. If just on the basis of that a subsidiary is owned by the parent company, we cannot assess the applicability of economic substance. So we need to see that whether or not any transactions being conducted in the subsidiary and the parent company, and what is the actual business. Maybe it could be falling under to headquarter business, or maybe such arrangement could be falling under there's a headquarters business, there's a holding company business. So we can assess the situation. If there are a real scenario comes up, then we would need to understand. We will be needing to understand the structure of the business, how the transactions are being routed. So yes, they may or may not fall under the economic substance regulations, but as stated earlier by Mr. Mendra, that even if they are not falling under the economic substance regulations, some authorities, they still require you to file the notification. If you can see my screen, you can see that these, and there are some, for instance, there's the way in the DIFC. It states that even unless you are exempted, unless you are owned by government, you are required to notify. Then Ras Al Khaimah free zone, they have clearly stated on their website that you need. So it depends on scenario to scenario. Yes.
Right. So in essence, we can say that if the relevant authority has provided us a notification to file it, then we need to comply with it, whether we are under relevant activity or not, right? And the foundational element should be that substance over form, and the core income generating activities has to be checked. And for a holding company and with the relationship with the wholly owned subsidiary company, we need to make sure that what is the transactions relations with them provides us the information with
the actual business, what they are actually doing.
What they're
the business model, we need to understand their business model.
Business model, right? And one of the question, Mr. Haseeb, I would like to address you, that how we can assess our business according to the ESR, and like how can you help for authority notification and filing returns for the participants?
Well, obviously, being one of the experts on the matter, we can assist you by looking deeply into your business model, the transactions, the structure. There could be an instance where you might think that it does not apply to be the case, but in reality, you might be falling under some of the relevant activity by, and it is better to be assessed. You can even do the assessment yourself. Obviously, this was the purpose of this webinar. To make the things clear, if you can make the assessment yourself, it's great. You can. There are some laws and regulations published by government of UAE as well. You can read through them, and then you can accordingly assess your business and how you need to. Maybe you need to restructure your business. We may help you in this restructuring as well. And we may also help you with the return filing. That would be the eventual event with that also. So yes, we can assist you in assessment and the restructuring of the business if required.
Right.
We can assist you in that matter. Yes.
Right. Thank you, Mr. Haseeb, Mr. Omendra, and Mr. Zaki for addressing all the questions. Now, due to the limitation of times, although we have received quite a few questions from the participants in our chat, but we have noted them down, and I would like to tell all the participants that whatever the questions that they have provided us with, we will reply them in email or on the call to them personally. And I would like to, due to the limitation of time, I would like to conclude this webinar on a very positive note that regarding this newly established enacted law by the UAE government, which is referred as the ESR, most of the companies which are registered in UAE will be able to comply with it on time. And I would like to thanks all the participants who have devoted their precious time towards this webinar. And I would like to tell them that they would receive the presentation copy and this recorded webinar on their personal email IDs, which is registered with us. And it is extremely delighted pleasure for us to present you this webinar. If you have any other queries or issues and the questions regarding this newly enacted law, you can see the email IDs of our panelist experts, which can resolve all the issues. You can note it down, and then afterwards you can email us your questions with, and we would like to provide our best services to resolve all the queries. Thank you very much, Mr. Haseeb, Mr. Uminder, Mr. Zaki, for your precious time. Thank you,
Thank you, sir.
all the
Thank you very much.
participants. Thank you.
Thank you.
Thank you.
Bye-bye. Bye-bye. Take care.
Take care. Thank you, sir.